Hello, everybody. Good morning. I'm delighted to be chairing this morning's panel, and I thought it would be helpful. You have the names of our panelists, but I thought it would be helpful if people just quickly say who they are so you can put the words to faces. So, Kay, do you want to start off with a quick intro?
Absolutely. Good morning, everybody. I'm Kay Swinburne and recently took over as the independent chair of the Association of British Insurers, so I'll be speaking in that context primarily today, but I've spent a long time in financial regulation and know many of the faces I can see in the room, so thank you.
Hi, I'm Iain Anderson. Similarly, it's good to see friends in the room as well. I chair and founded a business called Cicero, H Advisor Cicero, which is a public policy and regulatory affairs business. And I've recently, as Miles said, just become a non-executive director of the Department of Business and Trade, but I don't speak in that capacity today. You're going to hear from the Minister later.
Hi, Liz Claydon, global lead for deal advisory. I ran the UK deals business for 4.5 years. Before doing that, was a member of the exec there. And as Miles already said, I spend most of my time actually in life sciences, but historically I've also spent quite a lot of time in the consumer sector as well. Delighted to be here.
Hi, I'm William Wright. I'm the founder and managing director of New Financial. We're a think tank that makes the case for bigger and crucially better capital markets across the UK and Europe as a force for social and economic good. I'm also a recovering financial journalist, having spent 20 years as a journalist before setting up New Financial.
Thanks. So if anybody would like to ask a question as we go, you can put your hands up and there are roving mics. You can also submit questions through the app and I will do my best to feed them into the conversation. I was just going to start by saying this panel conversation feels very well timed. I know at Freshfields a number of us are feeling that our clients are pausing right now. There are new tariffs to deal with, tensions, supply chain issues, and negative sentiment. And I think for boardrooms, there's a lot to think about in terms of how they tackle those issues. But I was going to start with a much bigger picture question for you, William, to ask you, in these really turbulent geopolitical times, what do you think are the most pressing strategic challenges the UK is currently facing?
Thank you. Nice, easy question to get going. You're right, it's absolutely impeccable timing. So congratulations to Miles and the team at the City UK for organising the event today, although it could probably have been hosted with equally impeccable timing at any stage in the next 4 years. When we look at the turbulence of the last few years, particularly the last few weeks and months, I'm reminded of two famous quotes from the 1960s. The first being Harold Macmillan, when he said that the challenge of leadership was events, my dear boy, events. And the second, and perhaps more pertinent to the discussion today, the famous quote from the former US Secretary of State, Dean Acheson, when he said in 1962 that Britain had lost an empire and was struggling to find a role. Now, obviously, the challenges today are very different. The circumstances are very different. But the underlying challenge of trying to work out, to re-establish the UK's role in this violently, rapidly changing world, I think are roughly the same. And just 3 quick points on that. Firstly, Anne, as you mentioned, the underlying certainties, the building blocks, the foundations of the UK economy, the UK's role in the world, the UK financial system and success of its financial services industry have all been uprooted in the last few years, whether it's losing the UK's seat at the top table in the EU, whether it's relying on the US as a stable, internationally engaged and open, relatively open economy, whether it's a rules-based international world order, and wherever we look, you can see significant challenges. I think those have been compounded by the domestic political and economic backdrop in the UK. In response to these challenges, you'd really like to have a strong, stable, robust platform to enable a government to respond. And for a whole host of reasons, there are many aspects of the UK economy that have sort of stopped working over the past decade. And there are many aspects in social and political life that have meant that this government, despite having a big political majority, it has perhaps not yet responded with quite the clarity you'd want. And a final point on that, if we're talking strategic challenges, they require and demand a strategic response. And the first part of a strategic response is a clear strategic vision. And I think one of the big challenges, perhaps, that Iain might touch on, is as so far, I'm not convinced that there is a clear strategic vision from this government as to what it wants the UK economy to look like, what role it sees the UK playing in the context of international affairs and the rest of the world, and what role it sees the financial services industry and the city as an international financial center playing. And without that strategic vision, we're not going to be able to have a strategic response.
Well, Iain, you were being set up to come in with a
I know Iain said he's not speaking on behalf of the government.
I'm not speaking on behalf of the government, but I do like a debate, as many of you that know. So William has set that up. Look, just before I respond to that, I mean, my starting point to your question is I think we've all got to challenge ourselves about how we get better about the future. You know, the result of the US presidential election was quite a significant possibility for a significant amount of time. Yeah. And I'm kind of a lot of policymakers in this room and a lot of commentators in this room, and we're all commenting and trying to make policy on the basis of something that was a known. To quote another famous US politician. The possibility of a change to the global world order, which is exactly what is now taking place, the possibility of a change in trading relationships, which is also in the midst of taking place, was well known. So I think there is a challenge to all of us, and kind of well done to William and others who do think about this deeply, and I think many in this room do, is, you know, have we been caught unawares about something that was actually charging towards us? Now, I don't know if any of you have read Ed Conway's brilliant book about Bretton Woods. If you haven't, do. And I'm not on commission, Ed. But Ed unpacks in that book, it's about a decade old now, everything that kind of came together in 1944 to create the post-war global order. But he poses quite an important question there about whether or not the 1945 settlement still works. And I think actually, you know, agree with him or not on a day-by-day, hour-by-hour basis, but I do think the President of the United States is posing some pretty important questions as to whether or not the 1945 settlement actually still does work. I mean, did it ever work for sub-Saharan Africa? Did it ever work for LATAM? Did it ever work for parts of ASEAN? The obvious answer is no. The obvious answer is what? The obvious question to pose is, you know, the UK has sat for a long time at the UN around the Security Council. That is part of that 1945 settlement. But how hard have we worked to remain at that table? So, okay, to go on to the challenge briefly that I mean, I think the next 4 months are going to be pretty defining, certainly here in the UK. What do we have? We've got the mandate for GB Energy set in legislation coming in the next few weeks, and it is ready to start trading and answering the what is it going to do question very quickly. We've got the National Wealth Fund's new mandate and a mandate that Anne effectively referred to in her opening remarks about a new geostrategic reality coming in May. And then the thing that, yes, around the DBT table, I have governance oversight for, but not policy oversight for, and that is the launch of the industrial strategy. Now, the thing I'm very keen that the government does do to answer William's question is that industrial strategy actually becomes the investment plan for the country, and that people can see that plan from space, so that we can actually really clearly define why and when and how to invest in our country.
So clarity is coming, I think is what you're saying. I was actually going to just pick up on one point, which was that a lot of this was predictable, potentially, in 2024. And we've been talking, Liz and I, about the M&A market and the fact that those of us that do M&A have been thinking it was going to be a very busy year. Yep. Do you want to comment on what
Yeah,
you're
look,
saying?
I mean, and again, set it up beautifully in terms of investors and CEOs. From an M&A perspective, they like certainty. Yeah, they don't like uncertainty and volatility. That's how the M&A market has worked over decades. Everyone can look at the cycles that we all see very well reported. But what I would say is that actually, if you look back, Claire, and you'll remember this well, if we just go back a few years, because I think it's probably an important way of thinking about it, and then look at where we are currently in the outlook and some of the sector activity, actually, just the sheer amount of disruption, just think about what happened in COVID and how we saw the absolute dearth of M&A, but then that huge bounce back in 21 and the early part of 22, and then obviously the conflict starts, geopolitical world became very unsettled, and at the same time, obviously as a result of that, with what was going on with energy prices, you had inflation, etc. So the 23, back end of 22 and 23 were really quite challenged from an M&A market perspective. As you say, I think everyone started to get used to the new norm. I think businesses started to realise they needed to continue to invest and continue to use M&A as one of their strategic levers. And therefore in 24, particularly as the year went through, we started to see a really nice uptick. And some of you will remember who follow M&A, actually at the change of administration in January 25, the return of animal spirits being talked about in the Financial Times, the bankers got very excited about, as you say, Claire, 25 being, the year of the deal market being back, and particularly being back at that top end, and private equity being back in it, because they really need that certainty. So it was called the Trump bump at that point in January. And then I was giving an address to some partners literally a few weeks ago in the US, and then we were talking about, obviously the tariffs had come. It was 6 weeks later we were talking about the Trump slump in M&A and the fact that now this year really is a more challenged M&A market. So I think the uncertainty will continue, I think, for the next few quarters. But in terms of just stepping back and looking at some of the positive trends, I think actually, Claire, you and I were just talking, although Q1 again was widely reported as the 2-decade low in volumes of deals from January to March just gone, but actually from a value perspective it was high. It was higher than the previous 4 or 5 years, and actually that was because some big deals happened in some very resilient sectors. So I work in the life sciences sector. J&J acquired Intracellular Therapies, which is a $15 billion deal. In the tech space, where again we've seen a lot of continued deal activity. You had Alphabet, Google's owner, acquiring Wiz, actually a cloud-based security platform. Again, that AI tech space is still very, very holding up well, I would say, in the space. And then I'd say the final one was infra and energy. You mentioned the energy sector. Maybe I'll talk a little bit about that when we talk about where we're seeing the strengths of that inward investment a little bit later, Claire. But we're certainly seeing actually still a lot of activity in that space at the top end of the market, but also private equity very much involved in it. So it's not all doom and gloom. It's been a bit of a rough ride if you work in the world of M&A over the last 3 or 4 years. But activity is happening. I'd say a lot of my clients are preparing for large sales and just waiting for those market conditions to be at the right time for them to access the capital markets. Clearly, capital markets you touched on that's taken obviously a hit right now, and we expect that probably to continue.
Yeah.
I don't know if you would build on anything on that, Claire.
Well, I only to say that I do think it is quite sector dependent, and we're seeing services far less impacted than industrials, consumer, etc. So there is a sector lens to it, but we're ever positive if you're in M&A. You have to be. So I was just going to change tack a little bit and come to Kay and ask you, Kay, around in terms of these shifting dynamics for the markets, do you think it's realistic that the UK tries to ride three horses? And by that we mean US, Europe and China. And just how is that going to play out?
So I would suggest that the UK doesn't have to just ride three horses, it has to ride every horse that is important to it. And therefore it probably needs to be the sort of something beyond that. It needs to be the person who owns a stake in many of these markets. So when you actually think about the UK and what we're good at these days, we shouldn't be actually nostalgic and think back to the good old manufacturing days. And, my main home is in the West Midlands. The idea that we manufacture things, that's what we do, is not actually true anymore when you look at the data and the statistics. We are a phenomenal services centre. And we should actually be really proud of that. We have shifted, as technologies and innovation have shifted, we've shifted our economy to actually be a service-led economy. And therefore, the services that we offer support those industries that we still do well, but actually is a whole load that we don't do anymore. And we maybe should be thinking in that industrial strategy, what can we be good at in the next decade or two or three and beyond, rather than looking back with nostalgia. So I think that's really important. And we also need to remember that most of these tariffs and all of the talk at the moment is about goods. This is about physical goods being imported and exported. And therefore, for us, it's less of an issue. The real big concern for us is if we get too involved and start to talk too much and start to antagonize other participants, then services may well become involved. And that for us would be a critical point. So we need to actually hold our powder dry and actually make sure that we stay relevant in conversations that are happening at global fora, but that we are not the chief antagonist and that we don't take the lead negotiating position for other blocs. If they've got a problem with a particular other large entity, let them fight it out. We don't need to be involved. We need to actually take care of ourselves and make sure that our markets stay open, stay competitive, and that there's a good reason because we will be a stable, sane voice, that we actually are the place that people can come and do their global competitive business from. And the insurance market and reinsurance market is global by its very nature. Your clients are global. And London really thrives because it is that competitive centre that people come to. We need to maintain that. Should we choose between the US, the EU, and China? No, we shouldn't. They're all really important markets for us. And even if you look at the subsector of insurance and pensions, the US is worth, in an export sense to us, about £11 billion. If we actually look at Europe, it's about half that. They are still very, very important markets. So we cannot take them for granted. And so we have to actually be very nimble right now. We have to hold our powder dry, and we have to only speak up on controversial issues that are really important to us and our future economy, rather than actually speaking up for the whole wide world because somebody's got an injustice somewhere. And I think that's going to be a really important lesson for our politicians, to actually step back and say, is this important for us? And if it's not, zip. It's going to be a really important lesson, and I'm not sure we're actually set up for that right now.
Interesting. William, I was going to bring you into the conversation and get your perspective on different markets and what do you see in terms of where investment's going to be driven, who's attractive, what's your take?
I was talking with a senior banker a few days ago, asking what did he think the UK should be doing in response to everything that's going on, particularly what's going on in the US? And he started with a very flippant answer, which is, well, we should do nothing. It's just sit back and allow what's going on in the US to effectively sort of help reboot and revitalize UK and European capital markets, to help nudge the UK in a certain strategic direction. And I think that he was being flippant, but I think he has there's a point there that there is very clearly a rebalancing, a shift in emphasis, in flows, in allocations already underway. The Bank of America Fund Management Survey, the last couple of editions of that, have each shown a record shift away from sentiment in US equities. And to zoom in on public equity markets, just as an example, with far less impeccable timing than this conference, we were supposed to be publishing a paper a couple of weeks ago looking at the trend of European companies moving their primary listing to the US. Now, you might argue that that paper has sort of been rendered academic by recent events, but the past decade has been dominated by, in this debate, has been dominated by talk of an exodus of European companies to the US market, the vortex effect of the US market, this sort of embedded, almost predetermined, inevitable outperformance of the US market. I mean, 10-year annualized performance on the S&P is double that of Europe, which in turn is nearly double that of the UK market. But already, just in the last few weeks, we've seen this. We've seen the discount between the two markets has rapidly narrowed, which is a very clear sign of a significant reallocation. To put that in perspective, 10 years ago, the European market had a valuation discount of around 6% to the US. That widened to 40% on a price-earnings basis at the end of last year, and has now come back in, just in the last few weeks, has come back in to just over 30%. So still a 30% valuation discount. Our report, even when we ever get around to publishing it, will explain that discount. It's still a significant discount, but it's an indication of how quickly things have moved. And I just want to go back to something I said earlier. That I don't want to give the impression that I'm sort of pessimistic and doom and gloom. I'm absolutely not on this. There is plenty of opportunity in all of this turbulence. It could have a galvanizing effect. It could, as I mentioned just a moment ago, could help nudge, help the government, help the UK take some difficult decisions because it has to.
So I mean, I have an idea for William. I think you need to make this an interactive map because, as I say, Miles, with his impeccable timing, could have done this conference any the next 4 years, to your point. So things are changing, and I think, and it's related to your M&A point as well, too. The conversations I was having with investors in November and December and pre-12 noon on January the 20th are very, very different to the conversations I'm now having. The people that were talking about a primary listing in America, many of them have paused.
You'd have to be pretty brave to go ahead.
You'd have to be incredibly brave, and there are more astute investment bankers in the room than I on that question. So again, I think the challenge to this room is, what are we doing about it? What are we doing about the capital markets reform piece? What are we doing about, the investment plan for the country? And to pick up on Kay's earlier point, I mean, about not rushing. The Prime Minister has talked about being the bridge and creating an opportunity to be the bridge. I think that's absolutely right. I think it needs more definition, as you might say, William. But I mean, just waking up to that headline of the Chancellor last night, not absolutely treading in a very, very, very careful way, not rushing to judgment. I think the politics is emerging in a way that allows us to navigate this. But this is an opportunity to seize compared to where we were even 3 months ago.
But I would suggest, rather than actually having a bridge, which is very public and you're therefore seen to be taking sides, because a bridge only has got one side and the other side, you need to actually have a network of tunnels. And you need to do this diplomatically in the way that the UK does it really phenomenally well.
Yes.
We need to stop going for the publicity and actually have the results that we need. And a network of tunnels, I would suggest, is slightly better and more productive than a bridge at this point.
And we've had a question in, and it's, are economists wrong about the long-term negative impact of US tariffs? And therefore, are decisions being made without proper analysis? And I was going to really put it to you, Iain, in terms of the industrial strategy. Is it going to be enough, do we think, when you think about the long-term negative impact of what's been happening?
So it's a key component, and back to what Kay was talking about earlier, this has to be about the new, not about the old, and the hydrogen economy, core part of industrial strategy, our life sciences sector thriving and creates an opportunity that you point to, core part of the investment plan for Britain. But also financial and professional services. Well done lobbying on that one, City UK team, is 2 of those 8 sectors. To Kay's point, we're good at this stuff. We're very good at this stuff. So let's make sense of that. And there is detailed work taking place right now. So for me, it is an absolutely crucial element about answering the essay question that William was posing a little bit earlier, which is, what is the country about? Why would you want to invest here? And when it is published in the summer, it's going to be a really incredible moment, both for the government, but actually much more importantly for investors in the country.
Okay, what about on the regulatory side? How should that be evolving?
So I think this is a huge opportunity. We've got lots of uncertainty, and we know that there's going to be lots of uncertainty for an extended period of time. So why don't we use this time to get our own house in order? So we know that financial and professional services are hugely important to this country. So financial regulation, let's really tackle what that means into the future. So what does the regulatory framework look like when we're all using AI in our businesses as standard? What does it look like in the future digital economy? Is the dollar going to be maintained? Probably not. Is FX going to be maintained in quite the same way? And therefore, the very impressive statistic that Anne quoted earlier about FX in London, are we going to maintain that, or are we going to have to shift to the new digital world and therefore still be relevant in that new world? Let's use this time now as an opportunity to get our regulators up to speed and to actually work with us as participants in the market for future regulatory frameworks that are going to work and stand us in good stead. So for me, there is a huge value in disruption. I think we have layered regulation on top of regulation on top of regulation. We have all the old EU regulation that I had a hand in making some of it, and then we've added to it since we've come out of the EU, and we haven't taken things away. We have things like consumer duty, which is a principle-based regulation. Brilliant. We've been calling for it for decades, but we still have all the prescriptive layers underneath it from all the previous legislation, which hasn't been taken away. So I think we need to look at this very differently. Let's be brave. Let's set out our stall. The strong and simple regime that Sam Woods has talked about for a very long time, it's tied in with the Basel 3.1 implementation. Let's take that away. Let's separate the two. Let's do what we need to do now to make our businesses more competitive and to bring more people into the UK as that stable, competitive environment. So for me, the regulators have still got a long way to go. And certainly at the ABI, my members are still saying that that secondary competitive agenda is not really being delivered on. So we need to assist them. I think it's very important that the industry and the likes of the City UK continue to press for those things that make us more competitive. And not just the tweaks. We need to go for the big fixes and that future vision for that digitized financial market of the future. And London doesn't necessarily have to be a global financial center in the digital world, but I desperately want it to be the leading one. And so we need to actually think now what that means. And I think our regulators are probably going to really appreciate some assistance in what that means and actually helping them actually set out their stall. We shouldn't forget that in the US, there is a task force being set up for financial services deregulation. They're not calling it that, but they are actually going across all of the different regulators. There's one team set up to look across the board, and they have at least a year, potentially 18 months to do this work. So it's not happening outwardly, it's not happening with a big bang. They are doing their work diligently, data-led, and they will be putting some pretty major proposals on the table as to how they have a competitive US financial markets of the future, not just capital markets, but going beyond that into all the other subsectors. So we shouldn't think that we are the only ones looking to actually make ourselves more competitive. The US, when it happens, will actually have a solid piece of work with a lot of experts I really value their opinion on, actually working on this, both academic and practitioners. So I think, the disruption is going to continue to happen. We just have to use the time now, not saying nothing's happening and not filling the void with noise. We need to actually do the work ourselves and actually get our regulators fit for purpose for the next 100 years.
And I was going to ask Liz now, as well as the right regulatory environment, what else are investors taking into consideration when where they're deciding where to invest? And we've had a question in which is similar as well, which is to say which are the other markets, other countries which are best positioned to take advantage of the current uncertainty? So
yeah, well, let me start with that, and then look, I would say let's not. We talked about we have to be optimistic as M&A professionals, but the UK continues to be a really attractive market to invest in, and the stats back that up. So in 24, there was only the US who was higher than the UK as where foreign investment wanted to put its capital. So I think it was 93 billion invested. Half of that was actually from the US. Some of that, William, was to do with the valuation gap you talked about so eloquently earlier. But actually we have our strategic position in those trade corridors that Kay's talked about, or tunnels. You can start your day in London talking to Asia. I have a global role, which is good and bad when you sit in London. So you start in Asia, but you can finish in the US. That's why it's such an attractive place to do business. Our language, our law system, we sometimes forget about. But importantly, the quality of the talent and diversity we have, and what we're doing in some of those sectors that we've talked around: energy, life sciences, the university system, etc. I was going to touch on sort of the green energy, which again has been touched on already quite a lot. We look at a company like Octopus Energy. 5 years ago, who'd really heard of Octopus Energy? I think its market capitalization was 84 million. It's now 9 billion. And actually, the reason that company has grown how it has is because of the investment that's come in from all over the world: Australia, the US, Canada. So both private equity and corporates are looking at that and saying, how can we be part of what's happening around the green energy space in the UK? So I think, to be honest, we just need to be careful, Claire, sometimes to not talk ourselves down a little bit much. I really loved what Kay said about actually, I think right now, compared to a lot of markets, the UK will continue to be a market where we've got real talent and opportunities to invest behind. And we're absolutely seeing that playing out across all of those service sectors that we've just talked about before. So I don't know whether that sort of answers the question.
I was just wondering, any thoughts from the panel on other markets that other countries that might see this as an opportunity for them?
So on financial and professional services, we've got some obvious partners. The other global financial markets are places that we have already got very deep regulatory cooperation with. So why don't we go one step further and actually do some form of mutual recognition agreement in the way that we've been trying to do that with the Swiss? So, I mean, let's accelerate some of these discussions. We have the digital trade agreement with Singapore. Let's make sure that we actually really capitalize on these for financial and professional services. Let's make sure that we identify all of the markets where we know we have got really important things going on with partners. So I had the pleasure last week of hosting the Premier of Bermuda on a reinsurance perspective. But they are really keen, having reformed their regulator, and they now actually have a world-class regulator who is nimble. Let's cooperate more. Let's work out a way that we can actually really identify the areas that we are strong in and that we have got partners who think alike and work alike. So I do think that we might need to be a little more granular in terms of subsectors, working out where those markets and those relationships are, and go and strengthen those now, rather than wait for that big bang moment for things to settle down. I think we can actually do a lot of that networking now and make it happen.
Yeah, and there's been a question posed which is around the UK's strategy for sub-Saharan Africa, taking into account the huge impacts already by the Chinese in building business relationships there. So probably not one for our sector necessarily, but more generally thoughts.
But why not?
Yeah.
But why not?
Yeah, true.
You know, I mean, because we, you know, we may have had a blind spot in terms of creating the capital markets opportunities for sub-Saharan Africa up until now. But why not? You know, to make sense of the logo of this conference, why not? Yeah. You know, and I think bridge, tunnel, whatever metaphor we're going to get into, there's an absolute opportunity to build on what Anne opened this conference around. You know, we can be the place, rule of law, stability, capital markets reform. There are lots of ingredients that lots of people in this room have been working very, very hard on. Now is the moment to really, to your point, double down and push the button. And, you know, if we look at some of those, not just the investment opportunities, but the potentially new trading relationships. And we've been having this conversation in a way, have we not, quite fundamentally since 2016, but not doing very much about it. Now, you know, potentially what's been happening since January the 20th is the jolt that we all need to actually get on with it and go faster. And I think that is the challenge to everybody in this room.
Mm-hmm. And on green finance, we are doing that. So, I mean, when you think about the work that we're currently doing out of the City of London on green finance for sub-Saharan Africa and other countries, you know, there are a very large number of countries that need our skills to assist them in how to actually fund that transition to a more green economy and, you know, to protect them from climate change. So I think there are pockets we are doing already. We just don't actually sing very loudly about it, and I think we just need to.
Yeah.
So, conscious of time, I'm going to ask you all the killer question now, which is if you could offer one key recommendation to the UK government for navigating through the current global shifts, what would it be? And I'm hoping you each have a different one. But why don't I start with you, William?
I thought maybe we could go down.
We could go this way. Okay.
Thank you, William.
Right?
I think for me and for the insurance, reinsurance and pension industry, it's about stability and about competitiveness. So my wish for the UK government is to use this time of instability to get your own house in order, to actually get your growth agenda, to make us more competitive and to actually really just focus down on the things you can change and let everything else pan out around you and have the quiet conversations, not everything else, but get your own house in order, get more competitive domestically.
So I have the privilege of trying to answer your question almost on a daily basis at the minute in terms of what I want government to do. And that is, and we kind of referred to it earlier, and that is to paint this investment story in more primary colours, so that you can literally, any investor globally can see the story, can see the investability, can create the M&A because the regulation is right, because we are that bridge or tunnel, or to carry on that, we are the place to do this. We have the attributes, and just paint in some clear primary colours.
Yeah, look, maybe I would say this, but I love the fact that the professional services and the financial markets are such an important part of the industrial growth strategy. So, but I do think we need the next click down. I don't, in terms of what does that actually mean? How do we get that really positive shared narrative about how proud we are of this industry that we've created, and we've got. I think the Big Four alone, without we get into the legal profession, I think takes on 7,000 grads a year. We're one of the top, the top graduate recruitment places in our industry. So I think, delighted that actually that is absolutely part and what we're doing, but actually just really taking that next click down and getting the shared narrative. So actually, when we've got the platform that we're all talking about why this is such an important industry for us and why we retain our talent, I think that's one of the things we really need to be careful of, because other markets are now looking at that talent and saying, okay, come and work with us. So I think for me that would probably be my biggest one.
Mine, going back to building on one of the points I made at the beginning, mine would be stop governing as though there were an election next year. There is not going to be an election next year. And that, therefore, gives the government, I think, a degree of latitude that it is not taking. One of the questions that came in to you, Claire, was is there a danger that we're taking decisions without the right level of analysis? Now, policy is really, really hard, but there is no such thing as a sort of perfect understanding and perfect analysis. And one of my concerns when you look at everything that is going on is that, A, the government, the UK, is trying to do too many things, trying to focus on too many sectors at the same time, and make too many reforms in too many of those sectors at the same time. So my advice would be to zoom in on a smaller number of key areas, of key sectors, of key activities, of key reforms. Make them, as you say, visible from space, and do them. Because there will never be a perfect analysis or a perfect understanding that will give everybody 100% comfort that this is going to work. And if we hang around waiting for that, then the opportunities that are very clearly there could pass us by.
Well, I'm going to draw this panel to a close. I wanted to thank our panelists. I think it was a great discussion. I feel invigorated. I want to go and get my own house in order. I'm in fact moving house, so it's really important. So thank you to our panelists, and thank you very much for the questions and for listening.